Hello everyone, welcome to Zylostar, new weekly market update with me, Mr. Amidian and Mr. Summer.
The volatility indicator is at one of its lowest in the past 4 months. People are very confident about where the economy is going, where inflation is going, and even there's high potentials that the federals are not going to cut the interest rate by December.
Back-to-back economic indicators show this trend, and that's why the DXY reached higher levels. And from the other hand, re-election of the Donald Trump helped the cryptocurrencies such as Bitcoin and Dogecoin and so on to reach higher levels.
Hello again, let's take a look about Zylostar strategies and we'll check the Euro USD and gold market. Together we'll go to gold market because gold, as all of you guys know, is bearish all this week, all this previous week. Bearish and we are getting only sell opportunities. Let's check what happened. Gold is bearish momentum can help, like it may retrace and consolidate at current level from here. Now it's in 2563. Now what we are expecting may retrace from here to this resistance level from here, or may break the support level, continue to the downside. That's what we are expecting in a gold market. Let's check together the Euro USD. Why? Because as we know, the Euro USD has completed market cycle sitting on a major support. Where is the major support? It's here in daily time frame, like exactly in a major support. So it may retrace from this level. Like why? Because it should, how we say, it should retrace from our support in the high time frame. It should respect our support level from here. So since it's sitting on a major support, it may retrace to the upside, where it's going to this support to resistance level from here, creating a new resistance for him. That's our idea regarding the Euro USD and gold markets. See you next week.
Alright, so let's kick right into it. Starting with the DXY, as it appears that it controls the majority of the market nowadays. Not as in volume, as in market movements, trends, and people biases. Alright, so as you can see, the DXY is consolidating at its highest for the past 6 months. And we were expecting a retracement actually before this breakout. However, it didn't retrace. Very bullish momentum, high demand, etc., etc. However, we can see that this movement can be taken as one of two things, right? If this continues down to here, or at least reaching the supporting, keep going up, so we might see a bull flag forming here, right? So we have to keep an eye on the dollar index, and if a bull flag forms, even if it's at a very premium price, right, we still might see even more impulsive momentum to happen upwards. All right, if that doesn't if it doesn't form that bull flag, there is a possibility, which is very likely, that the DXY should retrace to a certain support before it continues going up. Right, keep an eye on the DXY. A lot of action is happening on this index. All right. So going to NASDAQ, as anticipated, after the breakout, NASDAQ retraced the trend line, and from here we can look for a buying opportunities. Now this happened fundamentally because the federals are most likely not going to cut the interest rate by December. So a lot of investors now, they're doubting their early purchase or early investment in indices, as they were expecting the economy to grow rapidly, or not grow rapidly, to get stronger very fast. And it appears that's not gonna be the case, as the US Federals, the Reserve, is taking it slowly one by one to get the economy for stabilizations in a one by one, like a step-by-step program. All right. So going to BTC USD. So Bitcoin is moving very impressively and very impulsively to the upward. Now it's true that we have not recommended any buying opportunity or any buying position, rather say, at this resistance of the upper trend line of this ascending channel past week, and we still hold that ground because We as traders, for those who are not aware of how trading works, we always, when we want to buy, we want to buy cheap prices. You never want to buy premium. Not because it wouldn't work, it might work if you buy premium, but it would be very risky, right? Even though you take a position here, stop loss or risk management has to be pretty big, right? We had multiple indications that the price should go down. So even if you did a sell position and that was close, your stop would have been very small, right? So not really a big harm, is it? Right, so from here we also are getting this shape, very impulsive move. The market is leaving multiple fair value gaps unclosed. Now what we can see here that there is this shape or this pattern that can be identified as an ascending channel if we ignore this impulsive breakout. Or it can look something like a diamond pattern, although I wouldn't want to validate it as a diamond pattern. But either ways, yes, it's very impulsively moving upwards, but still it's not technically a good time to buy Bitcoin, especially when it comes to crypto, because crypto are these types of assets that move very volatilely or impulsively to either directions in an instant. Right, so when you want to enter a trade or a position, you need the odds to be work into your favor, right? Not against it. Right, so from here we might expect Bitcoin to come down, close its fair value gap, probably most likely retesting this trend line, and from here we can look for buying opportunities. That will be it for Bitcoin.
Hello everyone, welcome back to our market weekly updates. This is Amidian from Zylostar. Once again, we are here to review and check the most crucial aspect of financial markets, which is fundamental. Let's get into it. I want to start it as usual with the economic indicators. Last week, two important economic indicators from inflation sector published for the United States. We got the CPI and PPI last week. About the CPI, as you can see here, the CPI jumped a little bit higher from the September, as it was 2.4% and it reached to 2.6% for the last month. The index for the shelter rose 0.4% in October, accounting for over half of the monthly all items increase. The food index also increased over the month, rising 0.2%, as the food at home index increased 0.1% and the food away from home index rose 0.2%. And also about the energy, we can say the energy index was unchanged over the last month. After declining 1.9% in September, the index for all items less food and energy rose 0.3% in October. So from the PPI also, we had a pickup for the producers price index. Totally, it caused the FOMC members to point about inflation, such as Goldsby and Kashkari and the other committee members, that they mentioned the strength of the economy is good and totally country is at the good shape. Totally, they pointed that the inflation is not satisfying and maybe the neutral rate must be higher, and we don't know exactly if cutting rate is on the table for December meeting or not. Also, chairman of the Federal Reserve, again, they talked about the independency of the Federal Reserve at the last week meeting and also mentioned about the bond yields and rate cut probability, which is lower than last month for December. At the end of last week on Friday, we got the retail sales number for the United States, and it again showed a strong consumers. As you can see here, the retail sales, which is the most important indicator in consumption, published stronger than expected. Eventually, all of them pushed the dollar to reach higher levels in the last week. Last week, although we got some news regarding the ceasefire between Israel and Lebanon, tensions remained at the high levels and some regions in Syria were under the attack. But Zelensky, the president of Ukraine, stated that the Donald Trump will finish the conflicts very soon. And about the corporate earnings, Walt Disney sold more by the help of new movies and products. We got higher than expected revenue and EPS both together. Okay, let's jump into the upcoming week. Next week is gonna be interesting for the Canadian dollar and European countries. Okay, about the economic indicators for the next week. On Monday, we are gonna have Bank of Japan Chairman Ueda speak, and later on 19th of November, on Tuesday, we are gonna have monetary policy report from UK, or better to say Great British Pound. And also at the same day at 5:30 p.m. we are gonna have the most important economic indicator for Canadian dollar, which is the CPI. And let's see what happened for the last month in Canada for the consumers price index. Later on Wednesday, we are gonna have the CPI number also for UK, and also on Thursday, we are gonna have Bank of Japan again a speech by the chairman, RBA or Reserve Bank of Australia, a speech from the chairman on also unemployment claims, or better say initial jobless claims for America, which is one of the most leading indicators in the employment sector. And eventually on Friday, we are gonna have retail sales from UK and also PMI numbers for both manufacturing and services in the European Union, such as France, Germany, and UK. And finally at 5:30 p.m. to Dubai time, as you know, our head office is located in Dubai. So we are gonna have the core retail sales and retail sales for the Canadian dollar. And that's why I said this week is very crucial for both of UK and Canada. And it can definitely change the scenario in these two currencies. And the last one is flash manufacturing PMI by the US for both of manufacturing and services. Let's jump into the corporate earnings. Next week is gonna be very vital for the corporate earnings because some big companies such as Nvidia, Target, Walmart, and Trip.com are gonna release their earnings, or better to say corporate earnings for the third quarter of 2024. And Nvidia also, we can say, is at the center of attention. It can change the sentiment of the investors and market participants for the next week. So do not forget, if you want to increase your success rate, or better to say win rate in the financial market, always mix the fundamental and technical together. It can change the probability of your success in financial market.
Thank you so much guys for watching us. Don't forget to follow, subscribe. We'll meet next week.